Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, member WSO Mentor shares his path from a bulge bracket investment bank to a middle market private equity firm, what he wishes he did for private equity recruiting, some unexpected advice on which investment banks to target, and whether or not he'll get an MBA. Enjoy. WSO Mentor, thank you so much for joining me on the podcast.
Yes, happy to be here.
Maybe we could just start off kind of rewinding back to your college days and the recruiting there for the investment banking. Could you give me a little bit about what the process was like? Obviously, you don't have to go into too many details about the school, but was there a lot of on-campus recruiting, and how did that play out? Did you get a high hit rate on like resume drops, or how did that all proceed?
Sure. So I'll kind of start high level and then get a bit more granular as we progress. So when I said earlier that the process was fairly streamlined, what I mean was most of the bulge bracket investment banks, right? The 6 or 7 of them, depending on how you define it, and middle market banks from, the elite boutiques like the Lazard, Evercore, Moelis banks, all the way to like Jefferies, Houlihan Lokey, Baird, William Blair, banks like that. So very wide spread coverage representation at the school in which I attended for my undergrad. This is back in the day when the timelines were not accelerated. And so investment banking recruiting typically happened at the undergraduate level when a student was a junior. So in the fall semester of junior year for my school and my process, most of the banks had a presence on campus, had a relationship with the Career Center. So they'd host, firm-wide information sessions, networking events at the local Boston offices to the extent they had them, plus in New York. Think of like a Wall Street Trek type program, which you guys may be familiar with.
Yep.
That happened in the fall. All the networking happened in the fall. Go home for winter break, come back, and then most of the investment banks start the formal recruiting process. Then, which, because we were a core school, was all held on campus for the most part. I very rarely had to trek to New York for super days, which was convenient.
That's great. And so in terms of the number of firms that were at your school, is it safe to say that around 20 investment banks or upwards of 30 were there?
I mean, what was kind of nice too is some banks that were really small and boutique, like say, for example, like Leerink Partners, which is like a boutique focused healthcare investment bank. Mm-hmm. Sometimes they don't have the time or resources to actually have a presence on campus, but they'd have a resume drop on our school portal because they'd previously recruited a couple analysts from our school, and so they wanted to keep that trend going, and so you could apply there. So if I had to sum it up, it was probably between 20 and 30 banks that recruited directly on campus.
And did you drop resumes for all of those, or were you more targeted?
No. So good question. I was primarily focused on bulge bracket. Mm-hmm. So I pretty much spent most of my time there.
Is there a reason for that? Like you just wanted to be kind of at
Yeah, it's actually quite interesting and something that I think about even now to this day. So, going through undergrad, the mentality around some of the really strong elite boutiques, which boutiques not even the right word because they're really large, really successful, like your Evercore, Moelis, Lazards of the world.
Right.
The mentality was that kind of bulge bracket was brand name and the best because they did coverage in M&A and they had a balance sheet, so they were doing capital markets, ECM, DCM, LEFIN, things like that. You'd get a really broad array of advisory services at your disposal. You'd understand both coverage and capital markets. They were big time names in New York. That was kind of the thing to do. So that's where I spent most of my time recruiting. Now, looking back, now that I'm, a couple of years removed in private equity, I actually wish that I spent more time learning about the middle market and boutique investment banks, where I think analysts do get a really strong, experience there because they deal a lot with private equity sponsors. They work on a ton of sell sides between private companies. They work closely with management teams and boards, and they, really get to be in the weeds, have a long leash and a lot of responsibilities. Whereas I was one of 170 at Barclays in my analyst class.
So
I was
you
put
really
into a coverage group where
you really think that answer, that typical answer in the interview of like, why do you want to be at this middle market bank? And the person says, the analyst experience, they get much hands-on. You think that's true? You'd say that's.
I do, because I spent a lot of time, I did close a deal while I was there, but I did spend a lot of time pitching. And just by the nature of bulge bracket banks, right, you're dealing with a lot of public strategic companies,
right,
where all the investment bankers at, Goldman, Barclays, Merrill, Morgan Stanley, right, Citi, all those banks, they're trying to get these large, sexy, public strategic M&A deals worth multi-billion dollars in enterprise value, collect really large fees at once. So by nature of that way of investment banking, where it's not as much of a volume shop, but you're sort of elephant hunting and working with the large strategic companies that move a little slower, there's fewer deals to go around. And I think when you're working with private companies, which most of the middle markets do, and, with founder-owned businesses and private equity firms, you get a lot more in the weeds on the transaction side, where I was doing a lot of pitches, not going to a lot of meetings, and didn't get as, in depth of an experience. I didn't understand the transaction experience from like legal docs, all the phases of diligence.
But do you think that was more just a function of the group you were in and your experience, or like what percentage of the analysts do you think had similar experiences to you versus the analysts that had just happened to get lucky and get like 3 live deals under their belt, or 3 closed?
Well, yeah, I mean, that's a great point, right? So yes, I closed the deal. The bank and the group were really strong, and they were closing a lot of deals. It's just the nature of the work as an analyst, and there's an associate, a VP, a director, and an MD on every single deal. The analyst, and sometimes there's even 2 analysts on a deal. The analyst at the bottom, right, when I was a first-year analyst, I was at the bottom. I had fewer responsibilities than if you were an analyst at like a Houlihan Lokey, Lazard, Evercore, where they're kind of doing a lot more.
Right. So you weren't touching the modeling as often, that type of stuff. It was
not as often, correct.
Right. Got it. That makes sense. And so in terms of so back to the recruiting for a little bit, you're doing, you're dropping, kind of focus on the bulge bracket. And were you just confident that you were going to get that? Because, those are some of the more competitive banks, obviously. Were you felt that you would get enough interviews, or you had the resume drops were early enough that you knew you were landing interviews that you didn't bother to resume drop at the smaller firms? Like
because it was all done through the school, and because our school had really strong relationships, there was a dedicated number of spots that in each kind of analyst class at a lot of these large banks that our school was guaranteed.
But isn't it still like aren't the odds still against you? Like there's other kids at your school that had high GPAs and probably, were good at networking, or you had the confidence that like, I'm going to land a BB offer.
Yes, I did.
Okay. And that was just because you had been prepping, or you kind of knew the landscape well enough. You felt like you were ready to go.
I had good internships. I networked well. I thought I had a leg up. I knew the landscape. Yeah, it's probably a combination of all of the above.
Okay, that's fair. And then so you start landing the interviews. How many of those bulge bracket interviews did you, like those first rounds, did you end up?
I had first rounds at all of them except Credit Suisse.
Okay, and then from there, approximately, you said a lot of the super days were on campus, which were really convenient. Did you just move straight into super days? Was it like, the next day, a second round? Like what was the typical kind of structure of
what was the format?
Yeah.
Sure. So typically it'd be a first round interview, which was what they, or I shouldn't say first round interview. I should just say a first round process where they'd have you meet with probably one VP for a half-hour interview, and then another either MD or director for half an hour.
Yep.
So the associates and analysts are not interviewing at the bulge bracket banks. At the smaller banks, they absolutely do participate in the interview process. If you got selected to the next phase, it would probably be the next day, where you'd have kind of 3 or 4 interviews with both people that were alumni of your school who were on campus, plus they had other people there like ready for the interviews, because they were doing all the interviews in kind of one stretch on campus.
Yep.
And so you'd have 3 to 5 more half-hour interviews, and the last one would usually be with kind of the most senior banker that was participating in my school's interview process, and then you'd hope to hear about your offer in the next couple of days. So it was fairly quick.
Wow, that's really streamlined. So in terms of the cutoff from first to second round, what, let's say they do 50 first round interviews, approximately how many people would make it to the kind of the more intense second day, would you say?
It was probably more like 30 first round interviews, and maybe a little less than 50% would make it to the next day, and then they'd hope to give like 8 to 10 offers.
Got it. And since it's a bulge bracket, they probably get pretty good yield, I'm assuming, from that.
Well, yeah, but all the bulge brackets are competing with each other, so
that's true.
It's not always that great.
That's true. So, okay, that's great. So thank you for that. I guess let's talk a little bit more about your time at Barclays. So you get the internship, right? That's for the internship recruiting, right? You go through that summer. Can you tell me a little bit about before your senior year, what specifically? I assume you got a return offer, right?
Yep.
And so
that's right.
was that pretty much across the board? Everyone got the return offer, or was it like
the return offer rate in my class was like mid to high 90s percentage wise.
Got it. Okay. And then from there, so that was pretty much, once you kind of pass that initial junior year recruiting, you're almost set, right? As long as you don't really mess up over the summer. So
yeah, the internship's probably yours to lose for the full-time offer.
Got it. Okay. And so you get the full-time offer, makes senior year awesome, I assume, makes it much less stressful. And then can you tell me a little bit about how you kind of prepared yourself, if at all, for kind of banking, and then kind of what your expectations were before going in, and then what reality was?
Yeah. I mean, look, there were definitely a lot of kids who chose a route where they would, try to learn Bloomberg and CapIQ and FactSet on their own and try to get ahead of the game and kind of read as much as they could. I mean, I was in undergraduate business school, so I felt like I had a good finance and accounting framework, at least to succeed during the internship, and that, the training and resources from, leveraging the other analysts and stuff would kind of help me on the job.
Mm-hmm.
And just to clarify, you're asking about the internship versus the full-time?
No, at this time, the full time now. Like you graduated, you have a great senior year, and then you kind of come in full time. You've done the internships. You have a little bit of a flavor of what the day to day is like. But then, how is it different? I guess from the internship to the
the full time. There was definitely you were tasked with more responsibilities. You had to stay much later. The hours were longer. You had to be responsible for work, and you couldn't really hide and say, I'm the intern, like, what do I know? And you kind of had to take ownership of your work.
Right.
So that was probably a key difference. I mean, other than that, I came back to the same group that I interned in, and I knew all the people, and, it was a little bit more like I kind of understood and knew what I was getting into. There was no culture shock, if that's what you're getting at.
Yeah. And then in terms of the hours, where you would say 80 on average, fluctuating from 70 to 90, or is it something different?
That's probably about right.
About right, yeah.
And obviously, if it was really bad, I've definitely pulled 100 or 200 hour weeks for sure.
Yeah, not fun. I remember those days.
Yep.
Not fondly. Anyways, so you're at the desk. You're how many months in before you start hearing from recruiters for private equity?
Well, let's see. I started on the desk say August 15th, and I started getting the headhunter recruiter emails for private equity and hedge funds in mid-October.
That's insane. So, okay. And this was several years ago. So
it's changed
it's
now.
Even, it's similar. The processes are still kicking off even earlier. So I don't even know when I guess the recruiters now are just probably contacting people as soon as they get the offers. But anyways,
pretty much. Yeah.
So you started hearing from headhunters. Was it was it a process where all the analysts were kind of sharing information? Was it collegial? Was it more competitive? And then how did you kind of treat those initial interviews with the recruiters? Were you kind of smart enough to go in it as okay, I know exactly what I'm going to say, and treating them as interviews, or were you kind of just still feeling it out?
Sure. So I'd say that my group was very lucky because there were 10 second-year analysts when I joined, and every single one of them had a PE job. Wow. 10 out of 10.
That's amazing.
Which is pretty unheard of. And so they were really collegial about it. Had a bunch of materials that they'd put together themselves, gotten from friends across the street, think template models and good ways to frame your deals and walk through your deals, things like that, that we could use to study. I definitely worked with my other analysts, and we studied together on the weekends and late at night when, all the other bankers had left. So yes, it was collegial in that sense. Not every bank or group is like that, by the way. Several other banks and groups, it's don't ask, don't tell, right?
Like mine. Yeah, that was like what it was like in mine. It was very tough.
Yeah,
Made it very tough.
The turnover is so high, and all the senior bankers know that it's going on, and they can't really stop it. But at other banks, other banks and other groups within Barclays, it was definitely much more frowned upon when you had to like get up and leave for hours at a time to do all these interviews and stuff like that. So.
Okay, great. And so in terms of the, so your specific group, it really helped that they were collegial. It was understood that you were going to be out for a few hours. You didn't have to say, oh, I'm going to a doctor's appointment or whatever. It's like, it was cool just to say, hey, I have an interview. And they understood that.
You tried to not have to say that.
Yeah, got it.
But yes, there were times where I had to go to like one of my associates or VPs and just be like, hey, look, I got to step out. I have like a 3-hour model test to go take. Like, I'm going to be gone.
Got it.
And that would happen.
Okay, that's good to know. And then specifically, how did that whole process go down? Just give us a little bit of information on so the recruiters contacted you in October, then how did it proceed from there?
Sure. So there's probably 7 or 8 core recruiting firms that represent most of the lower to upper middle market, all the way up to mega fund private equity firms that, do their recruiting process on cycle. And they usually have like either New York, Boston, or San Francisco / LA offices. So they're kind of like, mainstream PE firms, if you will.
Yep.
So for all the firms that participate in this on-cycle process where they go fairly quickly, that means that they're going to be interviewing. At least for me, it was in, the winter of that year. So the headhunters start reaching out in October. You go meet with them. They meet with, a bunch of other investment banking analysts who all have similar things to say, right? Because you don't really have a lot of deal experience, if any. And you're kind of trying to frame like what type of private equity investing you want to do and why, right? Growth, venture, buyouts, specialty investing, like renewable energy or consumer or technology, right? Whatever it might be, or generalist.
How did you even decide to what you were going to say for those? Like, what was your strategy going into that? Because did you really care? Did you really have a passion for LBOs over growth equity or vice versa? Like, how did you even decide that?
Yeah. For myself personally, I wanted to do more generalist private equity. I did not want to do I did not want to interview only for private equity firms that invested in the industry coverage group that I was in at Barclays. So I wanted to expand and get a little bit more breadth of other industries. After all, how could you pick what industry you're interested in, want to do the next 2 to 5 years in your private equity firm when you just started your investment banking job?
Right.
So I was pretty generalist and open-minded, and I also knew I wanted to do buyouts, leverage buyouts specifically, versus growth equity or something special like FIG or real estate. And I definitely didn't want to do venture or even hedge funds. So you asked how I decided. It was mostly just LBOs were what I knew, what I thought I was interested in, and a lot of the firms are buyout firms, right? There's far fewer firms that do growth equity. They're, so the odds of getting a PE job are way higher if you stick to LBO in New York, right?
Yeah, so you're just playing the odds, really. Which is smart, and I mean, it's still interesting. You knew LBOs, but you're playing the odds, which makes sense. That's exactly what I was doing. When I went through it, I found it interesting. The work is interesting, but I think that's a smart move, not necessarily to be like, oh, I really want to do growth equity. They're like, well, there's only two pure growth equity shops. So sorry. Anyway, so yeah, continue on that whole path. So you start kind of you're talking to recruiters, and then how quickly does it happen in terms of they all of a sudden just start calling you and setting up, these cocktail hours?
So the process. Yeah. So the process is there's usually a specific weekend known as kickoff weekend, where one of the mega funds typically start the process. And so one weekend they basically just decide, okay, we want to start now. Like we want to start interviewing, and they reach out to their respective headhunter firm that represents them, and they tell them on Thursday, Friday night, that headhunter reaches out to the people who will be getting the first round interview there. Sometimes the private equity firm picks resumes that the headhunters give them. Sometimes the private equity firms let the headhunters dictate entirely who will be getting first round. It varies by firm. The mega fund that starts the process as tell them they got to be here by 9 a.m. Saturday morning. The candidates who are chosen get a chance to accept that interview or not, assuming they accept. They go in, 9 a.m. Saturday morning of that weekend, interview with 3 to 5 people, all in half-hour to hour stints. If they get called back for the modeling test late that afternoon, they'll get called back, and this model test is not a case study, not a take-home. You don't get a sim. It's typically a speed test where you get 75 minutes to 2 hours, so 120 minutes, where you have to build a quick LBO, three financial statements, debt, and pay down schedule and return schedule. And it's judged usually for completeness and correctness versus like thought. If you pass that, which is more of a check the box, you'll move to the final round where you'll have, again, 3 to 5 more interviews with more senior people across the firm. Offers are usually picked by that night. So now you're at Sunday night and they're communicated Monday morning with 24 hours to accept or decline, aka they explode in 24 hours. That officially kicks off the process. Now all the other mega funds that heard about this start
frantically moving.
Calling their
Got it.
Yeah.
And so it's basically a game theory. It's just basically game theory where the first mega fund moves and then it's all of a sudden everyone moves. And everyone's
effect. Yep, that's right.
Yeah. So I guess one question I have is in that process where, let's say you accept the interview, obviously you go in and you have that first round. And what's the drop approximately? Let's say for this, I know there's no typical mega fund, but say a typical mega fund, are they bringing in 30 people? Are they bringing in 10? Are they bringing in 50? How big is this process? Like, are they for this?
If their associate class for each associate class is like mega funds are usually like 8 to 12 associates, they'll probably bring in 30 to 40 for first rounds.
Got it. They've already been kind of screened by the recruiter, and so it's so your chance of actually getting an offer isn't horrible at that stage if you've already made it in the door. So you make it through from the first round to the modeling test in the afternoon, approximately what they cut 50% off or a little less, a third of them?
Nope, that's about right. Maybe a little more, actually.
A little more. Okay. And then from the modeling test to the final round, approximately how many people kind of bomb that thing and don't make it through?
Well,
do you know?
Again, since it's the first set of interviews of the entire process and nobody's actually had the test yet, they've just been practicing, probably more people bomb this one than they bomb the next ones later in their process.
Makes sense. And the specific LBO modeling test that you're doing, is it, you said 3 statement, how much do they want to see actual like levers and scenarios? Is there any levers or scenarios? How detailed are you getting? Or is it more just like here, high level assumptions on revenue, COGS, whatever, and getting to an IRR quickly? Is that kind of the what they're checking? Or is it, how pretty your debt waterfall schedule is? Or
yeah, much more high level assumptions for working capital drivers, revenue, COGS, EBITDA.
Yep.
No real sensitivity on anything. Pick a purchase price as multiple of EBITDA. Pick your capital structure in terms of how much leverage, how much equity. Build out the statements, build out the debt waterfall, build out the return schedule, and make sure it's all formatted properly and get done.
Yeah. So I feel like for bankers, I mean, it's probably pretty tough for an analyst who hasn't been in Excel for 2 years. I feel like when I did those LBO modeling tests, it was pretty easy for me at that point because I was like literally had been living in Excel for 2 years. But I can imagine somebody who's just 3 or 6 months on the job, it's actually pretty stressful.
Absolutely.
Yeah. So how did you do? Did you feel like you practiced beforehand? You said you had some material, so you felt pretty good kind of going in?
Yeah. I mean, countless hours of studying and practicing these exact tests that leak and get out, right? I mean, I had the Warburg-Pincus test, and that's one that I practiced from, and I had a bunch of similar other ones, and you just have to practice and practice so you get it right and make sure that you feel comfortable going into the interviews.
Yeah, that's
before
fair.
They happen.
That's fair. Great. So you made it, you get the offer. Is this kind of, were you given an interview in kind of the first in your year that the first mega fund that kind of came out? Were you given one of those spots?
No, I was not. The first interview I had was that Monday after Mega Fund weekend with an upper middle market firm. So think like Onyx, Kohlberg, Clayton, Dublin, and Rice.
Got it.
HRG, Veritas, people like that.
Got it. And so you go into that. How does that go for you?
It was my first one too. So the first one's always the hardest. And, I kept at it and had a bunch of interviews with similar like-minded firms, all the way from, $250 million funds up to, $5 billion.
And how did that,
And
was
within
that week just insane? Was that week you're just,
well, yeah, it was over the next 2.5 to 3 weeks. But yes, insane.
got it. Okay. And then approximately at what stage in that process did you get an offer, and were you just you knew, hey, if I get this, I'm gone? Or was it more of hey, this is exploding, I don't know what to do? I have this.
No, it was more, you take the first offer you get typically. I mean, kudos to you if you get multiple offers and you're worried about which one you should take. Most people just get one and they take it.
Got it. Makes sense. Yeah, it's super competitive, as you can see. So that makes sense. So this has been really insightful just to kind of get a peek behind the curtain of what it's really like. I think just giving the listeners that perspective is really helpful. And so what do you think could have helped you? I mean, it sounds like you were pretty prepared. You kind of did what you had to do. Anything you would tell your younger self, or advice you'd give your younger self, kind of looking back, either to prep in college or something you would have done differently?
Sure. One thing I would have done absolutely differently is I would have not participated in that first wave of madness 3 to 6 months after I hit my investment banking job out of college. I would have waited till I was a second-year analyst and done it then, when I had much more time to think about what types of firms I wanted to go to and why. Plus, I'd have deal experience, be better in Excel, all those things that you just mentioned that you have to prep for in a relatively short order.
And you don't think there's any kind of discrimination for people who don't make it that first year or that first wave?
Well, if you do it your first year and you don't get anything, you can absolutely be perceived as damaged goods to the headhunters, which will not be good for you.
Got it. So you think almost the people who wait for that second year, that second round, and say, well, I'm not really looking to jump yet, and they put in that at least full year plus, they're going to be more prepared. They're going to look better when they're compared against the first year. So is that kind of the idea?
Yes, correct.
Got it. Okay. I can see that. It's interesting because personally, I would think that as long as they know you were kind of turning them, that you were waiting and it was your choice, I guess it doesn't necessarily hurt your image.
Yes, correct.
Great. Anything else you'd like to share with the listeners before we call it? Or any advice
Nope.
you want to give them specifically around, the bulge bracket life?
Nothing in particular. Any questions for me?
Yeah, I guess, it sounds like you have a few regrets, but nothing really major. I guess in terms of your next steps, are you planning to get an MBA? What do you think in terms of coming from middle market private equity? What your next options are?
Sure. Fortunately, I was promoted from associate to senior associate, and there's a path for me to move up without the MBA, and I'm likely going to stick to that path. So not pursue an MBA.
Nice. Yeah, I think a lot of people think I'm going to go get the MBA and come back, and then sometimes your seat's gone. So it's not necessarily the worst option.
That happens very often.
Yeah, so not a bad idea if you like the work and you're at a great fund, staying put and just putting your head down can be a great career. So anyways, WSO Mentor, thank you so much for taking the time. Really appreciate it. And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick@wallstreetoasis.com. Until next time.